The Bank of Canada has kept its target for the overnight rate at 1%. I'm joined down the line today by Erin Weir Research Associate at the Canadian Centre for Policy Alternatives to discuss what this latest decision will mean for the country. Mr. Weir, is this the decision you were expecting?
Yes, it is. The Bank of Canada has kept its target interest rate consistently at 1% for the past 2 years. The only real rationale to increase interest rates would be to reduce borrowing and inflation, but Canadian inflation has been quite tame. The last Statistics Canada Consumer Price Index report showed an inflation rate of only 1.3%, which is actually below the Bank of Canada's target inflation rate of 2%. So there really wasn't any reason to expect the central bank to raise interest rates, and indeed it did not.
The economic expansion in the United States, European recession and decelerating growth in China and other major economies are all reasons the bank has chosen to keep the rate at 1%. Are these the only reasons for this, or are there other aspects which have caused the bank to reach this decision?
Well, no, I think it's generally a situation where inflation is low in Canada, so there's no rationale to raise rates. And as you suggested, and as the bank itself said in its press release, the global economic outlook is fairly uneven, so it doesn't seem like there's much threat of inflation in the future, and therefore the bank is content to keep the interest rate fairly low.
The country's weak spot remains exports, which the Bank of Canada says won't return to levels seen before the last recession until the start of 2014. Do you think this will be the case? Could new fiscal stimulus be on the cards if global demand stumbles again?
Well, certainly that line in the Bank of Canada's press release also caught my attention. Exports have been a weak point, and I think one of the reasons for that, which the bank itself points to, is that the exchange rate has been overvalued. On financial markets, the Canadian dollar trades for a little bit more than an American dollar. Conversely, the OECD calculates that a Canadian dollar has only as much purchasing power in Canada as 80 American cents in the United States. And what that means is that Canadian exporters have to buy their inputs using the currency's actual purchasing power, but then must price their output at this much higher exchange rate. That squeeze on exports is what has pushed Canada into a trade deficit, which subtracts from economic growth and employment. So it's been a major drag on Canada's economic recovery, and I fear that it's likely to continue.
Many economists have expressed the opinion that the country could do with less stimulus. Is a future reduction of stimulus appropriate?
Well, no, I would actually disagree with the view that Canada needs less stimulus. I think given how weak the recovery has been, there's actually a case for more stimulus. I wouldn't necessarily characterize it just as short-term stimulus, but a need for public investment in infrastructure and other long-term projects that would also help to create jobs today. One of the important factors, I think, is that the labor market has not created nearly enough jobs to keep pace with Canada's growing working-age population and labor force. So I would certainly err on the side of more expansionary fiscal and monetary policy.
And lastly, the dollar Canada rose sharply ahead of the BOC interest rate decision. What do you predict for the future of the currency?
Well, I guess the other factor weighing on the currency this morning was the election in Quebec of a separatist provincial government. I think there's very little chance of Quebec actually leaving Canada, but any sort of hint of instability can have an effect on the foreign exchange markets. I would actually like to see the Bank of Canada be a bit more proactive in stepping into foreign exchange markets to moderate the exchange rate to a more competitive level. About a year ago, the Swiss Central Bank did exactly that to put the Swiss franc on a more even playing field with the euro. And I think, given how overvalued the Canadian dollar is, our central bank should look at doing much the same thing.
Thank you, Mr. Weir, for those interesting insights. That's all from me, but click back tomorrow when we'll be providing you with the very latest financial news and updates. Goodbye.